Tesla stock was up 4% on Friday. As you know, you are sitting right there at a resistance level at $250 per share. Here in this video, I will share with you all of your breaking news. What happens to Tesla if we break above 250? Yes, this could be a good week for Tesla, but we do have a lot of upcoming catalysts. I will also share with you what the hedge funds and institutions are doing following Tesla's over 50% decline from all-time highs, if they're covering on short positions, if they're adding upside exposure for this week. And, well, Tesla delivery issues are far overblown, and you can see this now starting to be reflected clearly in some of the Google Trends data. First and foremost, let's start with your Tesla stock news today. Tom Drew, Tesla's country director for Australia and New Zealand, said this about the new Model Y. He says, quote, "We are certainly not going to get into price wars. I know we have famously been known for changing our prices rapidly over the past several years. I really think we have gotten to a point with our pricing where it is where it should be. Once we release the general production pricing for the Model Y, I think we are at a really good point, particularly with the refinements to the upgraded vehicle. It is an exceptional value for the money." He says, quote, "We are expecting the first deliveries in May, with lots of cars that are coming to meet the demand." So that sounds good. There's lots of cars coming to meet the demand. Yeah, I think a lot of Wall Street's demand issues are going to be proven very short-lived for Tesla, while confirming that the most affordable rear-wheel drive model sold out in launch series guys will become orderable online within the next couple of weeks. So the launch series is even sold out in the country. Like, I don't know why they would sell it out, why it would only be on a limited supply basis. I figure sell as many of them as you can, but they're sold out. That's a really good sign. Quote, "While GM's and Ford's ADSs are very good, they are not at the level of Tesla's FSD. FSD is a game changer. No other US-based automaker can match it. In my experience testing various ADAS, it can perform in some scenarios similar to a Waymo driverless taxi, and that's saying a lot. I've had the chance to use both Waymo driverless vehicles and the new Tesla Model Y, and was surprised how capable the new Model Y was with FSD V13. The difference between Tesla and the rest is local roads and back streets. This is where competing automakers throw in the towel. The beauty of an autonomous driving system like FSD is that it's always focused, never distracted. Contrast that with the drivers in Los Angeles texting and driving. The point is, autonomy doesn't necessarily need to be limited to highway driving, and I would argue the higher the level of autonomy, the better. You won't get that from any other car maker outside of Tesla." And this article from Business Insider today says, it's titled, long title here, "I bought a Tesla for its safety and technology. Strangers have mocked me for supporting Elon Musk, but that won't stop me from buying another one." He says, "It hasn't put me off from buying another Tesla. I'm waiting for the new Model Y to arrive in the UK, and then I'll place my order. Being in a vehicle that I feel will save my life in an accident is more important to me than the personality or brand of Elon Musk." And you can see some pretty incredible video here on X of FSD being used in China with a cup of water being on the ledge of the door here. It barely moves, doesn't get knocked off, anything. And what this is really highlighting is how smooth the riding actually is. What's interesting, this was posted on Douyin, which is like the TikTok of China. So these kind of videos of Tesla's FSD is being posted to such a popular social media platform in China, is really opening the awareness to what Tesla is now offering in the country, which I would argue could be good for sales, although we won't know. These things move slow for probably the next couple of months. And look at this article from the Motley Fool. It says Tesla stock could soar 550% to $5 trillion after notching its worst day since 2020, according to a Wall Street expert. This is Ron Barron. Hedge fund billionaire Ron Barron recently reiterated his belief that Tesla will be a $5 trillion company within a decade. That now implies a 550% upside from its current market value of $764 billion, which is even crazier here. Adam Jonas at Morgan Stanley estimates Tesla will have 900,000 robotaxis on the road in 2035, and that each will contribute $19,200 to net income annually. That implies $17 billion in robotaxi profits in 2025. Subsequently, Jonas believes the number of robotaxis will grow more than sevenfold to 7.5 million by 2040, adding 120 billion to net income. Okay, let me just put into context how crazy those numbers are. Okay, because there's 3.3 billion shares outstanding. So divide that by 3.3 billion shares outstanding. That's going to give us an EPS number from robotaxis alone. That is by 2040, $36.36 of EPS from just robotaxis, let alone cars, energy, Optimus by then, just based on robotaxi alone, based on the let's call it 100 times multiple, you're looking at Tesla stock, a $3,636 share price. That is insane, right? That's already over 1,000% with all other things not included. So by then, is Tesla going to be at 100 times multiple? I have no clue. Just depends how much perceived growth there is in the future. Even assuming it's like a 50 times multiple, you're still looking at some huge gains. And that's just looking at robotaxi. And that's why I cover Tesla so extensively here on this channel, because I think Tesla really offers a favorable risk profile for outsized returns, right? Is Apple going to do something like that? No. Is even Nvidia going to do something like that? No. Is Microsoft? No. Google? No. Amazon? No, right? You have to venture into like small cap growth and very speculative names that you can lose all your money in to go for these, 10x, 15, 20, 30x potential returns. And that is not really ideal for a lot of people, right? Are you going to put $1 million into a small cap company that could do very well or could go to zero? Probably not. Could you feel confident putting $1 million into Tesla and getting 10, 20, 30 million dollars at some point in the future? I think yes, right? Obviously, everyone's going to be different, right? $1 million is a very vague number. Doesn't matter what the number is, right? I don't want to put $20,000 or $30,000 into a small cap company that could go bankrupt, right? Would I put $20,000, $30,000 into Tesla today? Yes, because the bankruptcy risk is essentially nothing. And that is one of the things that has always attracted me to Tesla. It is a relatively mature company that has huge upside potential. So you get some of that safety where you also get that upside potential, which you're not going to find this in big tech. You're not even going to find this in mid cap, right? You really have to go into small cap, riskier companies, because typically yield or return potential is correlated to risk, right? So normally, again, to be able to get that kind of upside, you have to take a lot of risk. I see Tesla as less risky with similar upside. I don't know of another stock like Tesla besides something like a CRISPR. If CRISPR is successful and able to edit genes and create new medicines over time, I think CRISPR is another one that offers, a really good risk reward potential, but still that's very risky. But in the short term, anything is possible. As I mentioned previously, as you probably already know, Tesla stock was up 4% on Friday. The markets went through what I deem a dead cat bounce, okay? What that means is this is not really a high conviction bounce. The markets just bounced, and they're likely to be sold off again. And if you have followed this channel in recent days and really over the past couple of weeks, you already know my stance on this, okay? I think there's probably a 50% chance of a recession. I don't think we're priced for that, down 10%, because we were all expecting really good things this year. So what happened is we were expecting, really good or excellent things this year. And now it's like we're expecting things are going to be good to okay, We're not even close to pricing in a recession. Now, if the data continues to weaken, that's the downside, right? That's where you price in more of that downside risk, and that's ultimately what markets will do. But this is one of the fastest 10% corrections in the history of the markets. Okay, so when you have a fast downside move like that, you can't just continue to fall, right? You bounce. And I think that's what happened. Now, it's kind of like 2022, right? Where you kind of fell a bit, you bounced, came back up, fell a bit, bounced, came back up, right? And continued to work lower. Now, this sell-off has been more aggressive. And whether or not we go into a recession is really going to dictate what happens next for markets. And, I can sit here and say this, and that's fine. You don't have to agree with me. And I would argue that you shouldn't agree with me, that you should come to your own conclusions on this. But I bet your ass I'm going to pay attention to what Scott Bessent and Trump are saying and the warnings that they are giving us. In a Sunday interview, so today, Treasury Secretary Scott Bessent says he's not at all worried amid a stock market sell-off. That's not surprising. It's what they've been saying. But take a listen to this. He says, quote, "I've been in the investment business for 35 years, and I can tell you that corrections are healthy. They're normal. What's not healthy is straight up." Fine, we can agree with that. He says, "I'm not worried about the markets over the long term. If we put good tax policy in place, deregulation, and energy security, the markets will do great." Fine. Quote, "You know that there are," well, let me just not skip over the important part. It says, "The stock market fluctuations have sparked fears of longer-term economic issues." And Bessent did not rule out a recession in Sunday's interview. He says, quote, "You know that there are no guarantees. Like, who would have predicted COVID, right?" Bessent said when asked whether he could guarantee there would not be a recession. He says, quote, "So I can predict that we are putting in robust policies that will be durable. And could there be an adjustment," he said, adding that the country needed to be weaned off of massive government spending. Bessent on Sunday urged Americans to watch how countries react in the 2 months following the start of reciprocal tariffs in April. Quote, "Either the tariff barriers come down, the U.S. can export more, trade is fairer. It's always been free, but not fair," Bessent said. "Or if they don't do that, we'll take in substantial revenues." Bessent also addressed cuts to the IRS after the Trump administration initiated a large-scale federal workforce reduction, including widespread cuts of probationary employees. And as I shared with you in the last video, Lawrence H. Summers, he was the Treasury Secretary under Clinton, so essentially Scott Bessent's role today under Clinton. He said on X, "I am convinced there's nearly a 50% chance of recession and maybe even a far greater risk of recession unless the current policy approach of tariff threats lurching is altered." So that's roughly, again, where I would put the odds of a recession this year as well. So literally the government is warning that there could be a recession. I think that would be ignorant to not pay attention to it. And I think you want to put yourself in a position to benefit either way. And I think this is a market you want to be very selective in where you're buying, right? Some stocks are pricing in some recession risk. Others are not. A stock like Tesla, for instance, down over 50% from all-time highs. It's not just because of Elon's political affiliation with Trump. It's not just because of some scary, misleading headlines about delivery numbers in Europe and in China. While that did have something to do with the fall, it's also pricing in that recession risk. And those stocks get sold off first. Tesla could fall further. But right now, I want to be in a position to benefit either way. If there's only a coin toss chance of a recession, I want to be invested in markets, but holding a lot of cash. So I have not sold a single stock, but I have been raising as much cash as possible, whether that is cash in the bank, that is cash in your brokerage account, no matter what you have to do, right? $100 in extra money could be $1,000 if we go into recession after you, let's say, deploy that when the stock market's crashing and after the recovery, right? You can make a lot of money just from a small amount of money in a potential recession. But in the meantime, Tesla could continue to bounce, right? If we can get above that 250 level, you're going to be on a pretty clear shot to that 280 level. That is where your 200-day moving average is. Now, we are going to have some very big data this week. We'll talk about that more in the next video because it's going to take so long to go through that. But you have retail sales, you have the Fed meeting with the summary of economic projections, you have real estate data, which is actually very important right now. If real estate continues to slow down, that's going to be a bigger drag on the economy. But what I can definitively tell you is hedge funds and institutions, they've actually been getting more bullish on Tesla as the stock has been falling. I guess that's what you would expect to see, right? If people were bearish on the stock, if Wall Street was bearish on the stock at 480, right? As the stock is 250, you would expect more people to be incrementally bullish on Tesla. And we see this reflected in the amount of shares that are being covered on, right? There's a lot of shares being covered in Tesla, and like hundreds of thousands on any given day, sometimes millions on these really red days for Tesla. And that is a sign that they're actually getting bullish on Tesla. This is the lowest short interest, one of the lowest short interest reports we have gotten on Tesla ever. Like normally it's a lot higher than this. It's about half of the amount of shares sold short as you had July of 2024. That's crazy if you put it in that kind of perspective, right? That's telling you something. Now, option activity over the past week is pretty neutral overall. 3,328 different trades totaling $11 billion with a positive order value of 47%. So overall, pretty neutral. If we take a look at this upcoming week, you have open interest on the call side of 51%, open interest on the put side of 49%. So it's pretty even overall. And if we look at the options chain, on the call side, you had volume of 47,000 at that 250. 250 level, you have 12,000 for open interest at that 250 strike, 10,000 for open interest at the 250, 13,000 at the 255, 13,000 at the 260, and other big ones are like the 285. You have 14,000 for open interest, and the $300 call for this Friday had about 25,000 for open interest. Okay, so if the stock gets moving to the upside, especially above 250, you could see a bit of that gamma ramp and gamma boost to some of these next critical strikes. A rise above 250 could lead to 260 pretty quickly, so on and so forth. And I think after a 55% sell-off, I wouldn't be surprised if Tesla could rally 20% from the lows, 30% from the lows. That would not surprise me because 1-to-1, you're not getting back to where you started, right? So you've already rallied about 15%. 20% rally from here would put you at about 261. And if you get back to that 280 level, that's about a 30% rally. I think it could be difficult to get above that 200-day moving average, but between 250 and 280, if this is a good week, that could easily be obtainable. Now, if it's a bad week, then you're headed near the lows again. Around that 220, 215 level should not be ruled out. With that said, ladies and gentlemen, let me know what you think about this information down below in the comment section. In the next video, we will be discussing the earnings lineup for this upcoming week and the economic data and what kind of effect those catalysts could have on markets. And tomorrow, we're going to get your retail sales report, like starting right off the bat on a Monday to start a new week. You have critical data that's really going to validate the growth scare or relax people at least a little bit. Ladies and gentlemen, if you guys want to come trade with us live in real time, check out that link down below in the description of this video. Have a fantastic rest of your day, and I will see you in the next one.